Well, good morning, everyone. This is Jeremy Kane with the Tennessee Department of Revenue Taxpayer Education Section. And behalf of our Commissioner, David Garagino, and our Staff and Taxpayer Services and Revenues Audit Division, we wanted to thank you for joining us for today's presentation on Tennessee tax issues for auctioneers. And we're going to be covering a very niche topic today with auctions. We do hope you've been able to either download the materials or review them. And we will be recording this. It will be available on our website in the next day or two. But let me go ahead this morning and get started. I would like to introduce the panelists who will be helping us with today's webinar. We have Dan Vinson assisting today. He is the Assistant Director of Taxpayer Services, and he'll be helping with monitoring chat. We as well have Billy Trout with Taxpayer Education, who will be co-hosting today with us. Welcome, Billy.
Thank you.
And we have also Thomas Meisenzahl, who is our subject matter expert from the Audit Division. Good morning, Thomas.
Good morning, Jeremy. Thank you for having me.
Welcome to have you both. They'll be helping throughout the webinar, so I've just really invited them to anything that they see that could be of good relevance today to help point it out. And we do hope that you enjoy this webinar we've got today. So if you're having any kind of audio issues, we do encourage you just to try to leave and re-enter the meeting, and hopefully that will resolve through the WebEx guidance as you're joining it. And then right here, we also do show on the Tennessee.gov revenue website. If you go to taxpayer education and then select tax webinars, this is where you're going to find the webinar once we get everything completed and posted to our website. And if you are a CPA and you need your CPE credit, at the end, please make sure to complete the survey at the end of the webinar to request your credit. So go ahead and start moving into the webinar that we have for you today. It's going to be Tennessee tax issues for auctioneers. And this is a very insightful webinar. It's going to be very beneficial, I think, to those who are potentially new into that industry, as well as those who maybe you've done it a couple of times, but you're wanting to make sure that some common issues you've experienced in the past, you don't want to experience those issues again, at least on the tax side. And so we're going to try to help you navigate through that today. So the topics that we're going to be looking at today is going to be the disclosed versus undisclosed principle, the occasional and isolated sales, those situations that pop up. We will have local taxes and licensing, digital and online auctions, the out of state and nexus situations that can happen in an auction. And then, of course, we got some resources that we can point you in the direction of. What we have is an essential tax law for auctioneers. And I think this is going to be the bedrock of what any auctioneer should know going into doing an event or signing a contract to do one, is that every auctioneer or agent acting for any unknown or undisclosed principal, where you've been entrusted with the possession of such personal property for the purpose of sales, you shall be deemed the owner thereof. And upon the sale at retail of such property, you shall be required to file a return of the receipts of sales and pay a tax thereon. All sales by auctioneer or agent when acting for a known or disclosed principal shall be taxed to the principal. Now that comes from our Tennessee rules and regulations, and you can see the chapter and the section of where that's coming from. That is just a wonderful thing right there to stay in mind of. It's something that I think every auctioneer should keep knowledgeable of, because we're going to look at some situations a little bit later, and it could really prove the difference in a good auction event and one that you look back upon and think, I wish I would have handled this a little differently. You don't want to find yourself in an unexpected tax burden because of some information you was unaware of. So we're going to try to help you prevent that. So going straight into the definitions, and this is going to be one of the key things right here, is that uh, an auctioneer acting for a unknown or an undisclosed principal, it's treated as the owner for sales tax purposes. So sales by an auctioneer acting for a known or disclosed principal, those are taxable to the principal. Now, these phrases, principal, dealer, auctioneer, agent, for some people, this may seem to be kind of vague wording. So we're going to help break down the definitions of these. The principal, this is the seller or the owner of the goods being auctioned. And this could be an individual, a business, an estate. The dealer, this is typically defined as any person or entity engaged in the business of selling tangible personal property at retail. And then we have the auctioneer and the agent. And so this is going to be the person or business that conducts the auction, most likely you, facilitating the sale of goods or property on behalf of the seller or the principal. And so before we go further, though, we've defined the roles. So what we want to do now is take a look at the implications of the disclosed and undisclosed. And I'm going to invite Billy, Thomas, if there's anything up to this point that you also want to go ahead and bring out just as a precaution, just as a word of wisdom, or anything that you see, you both feel free to just chime in, Dan as well, and we'll be happy to stop and listen to that. But disclosed versus undisclosed principle. So who collects the sales tax depends on whether the public knows who owns the property. And we're going to have a good example of what this would look like here in a moment. But it's very specific as we go back to that rule and regulation that we spoke of a moment ago, to make sure that you determine which one of these are you operating as. And so the disclosed principle, this is if the owner is identified to the bidders. And we got some bullet points here that are going to be beneficial. So the auctioneer is an agent and not the seller. So tax responsibility for the disclosed principle, when the auctioneer is the agent and not the seller, tax responsibility rests with the principal or the owner of the property. And if the principal is a non-dealer, then the sale may qualify as a occasional and isolated sale, which means no tax due. And the last thing there is that if the principal is a dealer, the principal reports the sale on its own tax returns. And so if you have a store who's basically making a sale of things and they have a surplus, this is where they would go back into their sales and use tax, and then they would just report those sales. But if this is something maybe like an estate where the person is not naturally engaged in business, it's considered isolated, occasional, and they're just selling property from the estate, then at that point, no tax would be due. But then the undisclosed principal. This is where the owner is unknown to bidders. And so those who are making bids, they actually will not know who it is that this property belongs to. And the auctioneer themselves is deemed as the owner of the property. The auctioneer must collect and remit the sales tax. The auctioneer must file returns just like any retail dealer, and liability cannot shift back later. And so now you maybe hopefully can see the significance of the importance of making it clear who is who at the very beginning of the auction. Even in your advertising, you want to make sure and let this be clear from the beginning. And Billy, do you got anything on this right here section? Because I know that Billy, you've seen, in your years of experience, you've had to see quite a bit of auction situations come through. And just like that last bullet point, liability cannot shift back later. You've probably seen a few people who, you know, wish they could go back and change how the auction played out, I'm sure.
Yeah, I mean, obviously it is important to get it right up front. And of course, our good auctioneers across the state are very astute when it comes to making sure that advertising is clear, doing other industry regulated sorts of things and protection like audio video recording and stuff like that. But when you do all these things and you set it up correctly, which I'm sure that you do, then that is a protection situation. So, um, it prevents an auditor. No offense to Mr. Thomas on here, he's a great auditor, but audit does have to check for these things, and if they can't see that this principle has been disclosed properly, then it creates a taxable situation, and it's a bad scene. So you don't want to do that. Thomas, you may want to add a few things on that from your perspective too.
I mean, obviously, document as much as you can. If it is disclosed and you're not liable for the tax per se, obviously try to write that somewhere down, write it on the bill of sale when you give that out. Um, Make sure you have as much documentation as possible so there aren't questions or holes in your story or in your transactions. I think that's the biggest thing we've run into recently is the lack of documentation, no bills of sale, um, no disclosure agreements, different things like that. Typically, some auctioneers will have a disclosure agreement. If the owner doesn't want to be disclosed, then they have a non-disclosure agreement. So different things you need to think about when doing that. For your case, you need to protect yourself, like Billy said, and document as much as you can.
Very good
Very good.
information there. And which this actually segues into the next slide we have here, which is how to properly disclose the principal. And so it is the auctioneer's duty, not the buyer's. It is fully upon the auctioneer to make sure that you disclose as principal. And so don't assume the buyer who is making the bids, we don't want to assume that they know how the auction is going to be played out. You want to make it very obvious to them, and as this is progressing for them. And so what you'd want to do is you would want to print ads. You would clearly state the owner's name in all advertisements. Online listings, you would want to make sure that each online listing must display the owner's name and do not list items as if you own them. And then on the day of the auction, you would want to verbally announce the owner at the start of the auction and item by item if multiple owners. Because the implication is that if this right here is missed, it would be you who would then be reporting this. And this is even going to be helpful to people watching who are thinking of having an auction, people who are looking to get in contact with an auctioneer, and you want to know how you can be prepared, the type of auction you're wanting to do. And so this could even be beneficial to you, but we want to make sure that you know these three things right here. For the auctioneer, you want to be sure and put the word out there of how this is going to be conducted through print, online, day of the auction. And I have some examples that we've put up here, real world scenarios, who pays the tax. And so on the left side of the screen, we have, it's a fictitious, like newspaper print for a auction, but this is where a disclosed principal, this is kind of an ideal of what you would want to make that look like. And so remember, it's fiction. It's, just something we just kind of created for an example. But if Jones Music Store, if they were looking to do an inventory reduction, and maybe they had a lot of extra music equipment that they normally sell, and they're just looking to reduce the stock or the inventory, then this is how the auctioneer would want to put this out in print when they are advertising it. So they're going to disclose the name of the owner. Do you see we got Jones Music Store? This relieves the auctioneer of tax responsibility. And so in this situation, the Jones Music Store, they know they are going to be filing a sales and use tax return on the sale of these goods as they normally would. And then the owner, as I said here, they hold the tax responsibility because they are also the dealers. Then over on the right side, we here have an undisclosed principal example. And this one, you're going to see it's a little bit more vague. It says surplus office furniture auction. Doesn't kind of go into any detail of who the owner is. It leaves that as a mystery. If you've seen this ad, you're just going to be, knowing that there is a surplus of office equipment, furniture that is for auction. And so key things here, it does not disclose the owner. The auctioneer is treated as the dealer and becomes liable for the tax on all taxable, tangible personal property sold through that. And so that hopefully right there is a good example that maybe you can kind of use as a rough draft for whenever you're going through the process of advertising for this. And just like Billy said here, you'll see it in our chat, but if you have any questions on the topic, please feel free to write those in. Uh, great time. We're going to leave the chat open. We want to make sure that if you have any questions, we can try to help get to those questions. I know probably a lot of questions are going to go around the topic of maybe online or out of state, in state, and we're coming up to those slides too. So here we have the occasional and isolated sales exemption. So usually exempt, not in business. So if it's a one-time personal sales, like a garage sale, but it would be exempt. It's not something that you're doing on a very common basis. So we understand this is going to be something you're just looking to remove some things from your house. We do have a little graphic here. It's going to be of a check mark where it was indicating that you didn't have to file that tax return on it, but it looks like it didn't show up here. Businesses who are selling used equipment. So maybe you're a grocery store, but selling old refrigerators, display shelving. If you are a short-term fundraiser or doing seasonal sales, for example, Girl Scouts, that would be considered, something that would be exempt. No, you're not in the business of doing cookie sales. Or, as we referenced earlier, an estate sale where the deceased was not a dealer. But now here's where the taxable ones come into, where even if it's like an occasional or isolated, this still is going to be taxable. And so this is considered included in business. A motor vehicle sold between partnership and partners. Businesses selling inventory through an auction, just like we had in that example. Auctioneers who acquire items and sell them as the owners, and then regular or repeated sales beyond temporary limits. Otherwise, if you are, every 2 weeks or once a month, every month, you are making regular sales, at that point, it does begin to have the definition of a business model that you're in. And so, Thomas, Billy, is there anything that you would like to add to this section?
So, with occasional and isolated, obviously you're not in the business of doing it. Think about it when you go get your Girl Scout cookies or you have a yard sale, you do it only once or twice a year. Those are the limiting factors, is you can only do it twice a year for a short sales period of no more than 30 days in that period. Other businesses that qualify that auctioneers work with a lot are either warehouse, like storage unit companies, or movers. Those are also classified as occasional and isolated. Um, and that's written in the law and written into the codes. So if you do a storage warehouse, you know, you've got a bunch of different units, they levy the unit for back and then they sell it. It's classified as occasional and isolated sales. Um, a big thing I do want to note right here with occasional and isolated, with your nonprofits, as long as it's donated items, excluding the Girl Scout stuff, if it's donated items for a 501c3, the tax is still due. So what I mean by that is the person that donates the item is still responsible to pay the tax. So if you're a car lot that donates a car for auction, you still owe the tax on that. Now the 501c3 doesn't on what they make from the auction, but the original purchase price is still required. And that would even go if you buy a TV and donate it to your church for an auction or to your local Rotary Club or whatever. That tax is still due on the front end. It's just not due upon the sale at the auction.
It's
Uh,
very good information.
So, but nonprofits still, even if they have an auction, they still have to adhere to the 30 days, and they have to adhere to no more than two selling periods within a year. If it goes outside of that, then you start turning into a business that's for profit, and that kind of, you get into muddy waters into that. So,
Correct me if I'm wrong, but I think also that if they exceed the two a year, then it actually makes all of the ones that they've done taxable as well, according to the um, manuals. I've read that, so it's something that, like he said, if you're like a nonprofit or charity and you're doing it, you definitely want to make sure that you abide by what the tax manuals say on that.
yeah, potentially. Obviously, it
Potentially,
depends on the dollar amount and different things like that, but
yeah.
Uh, it's got to be more than, I think it's 4,000 or $4,800 a year. But yeah, potentially.
Yeah, it's 4,800, like you're saying, Thomas. But the one particular point I wanted to just add to that as we get through this is that we do have a manual on for nonprofits and stuff, and we want people to go out there and take a look at that if that's the case. Most of the nonprofits know how this works anyway, but a key point to what Thomas and Jeremy were talking about too is, it's only right that businesses that have to pay tax are doing so on an equal foot for nonprofits that are actually engaging in similar activities. So that's the premise behind the law there too. There's also a few other nuances about certain types of nonprofits that have more than two periods and all that, but I'm not going to go into all that. It's sort of get lost in the weeds on that deal, but there's a few exceptions to that. But yes, check that manual out. And Dan, thanks for putting that link out there in the chat. That's awesome. Thank you very much.
Yes. Good information there. Here we have the importance of exemptions. So the sales for resale. Now, numerous exemptions does sales and use tax law provide for us. So sales for resale, this is going to be items bought for resale, not to use, and they are exempt from sales tax. And so as the auctioneer, these are things that you'll want to be mindful of something that someone may provide to you when they're making the purchase at the auction. If it's a sale for resale, the item must be resold as is or become part of another product or sale. The purchaser should present a resale certificate to you. And for example, a car dealership, if they buy from a manufacturer to sell to customers, then the purchase is exempt because the car is for resale. And so you want to make sure that you have that certificate of resale. We have a very good tool on our TinTap website where you can even verify the validity of those certificates of resale exemptions, and so you can even use that. There is the use-based exemptions, and so even if an item is not exempt on a standalone basis, its intended use may create an exemption. An example of this is if an item is purchased for resale, that may change its tax status. Auctioneers should obtain and retain the exemption documentation. And so we have, the Tennessee sales and use tax exemption certificates, as well as the 3-day affidavit for vehicle removal, and then product-based exemptions. Some items may be statutorily exempt in Tennessee. And some examples of those are going to be things like textbooks, newspapers, coins, currency, bullion. And so that's just kind of some general examples there. And if you have a question on that, we do want to make sure that you, of course, we have tax manuals for this information, but you also are always more than welcome to reach out to us at the Tennessee Department of Revenue. We can help answer those questions. We can help point you in the direction of what the tax law states on this, even if it's very unusual circumstance. We can kind of help divide between that. And then the local option sales tax, which rate applies? Now, I think this right here would be an area where probably a lot of people would be a bit more mindful of the implications of doing the auction, and you'd want to make sure that you charge the correct tax. You don't want to get all the way to the end of it, then realize that you're not sure what tax rate applies on anything. So Tennessee has both a 7% state tax rate and then a local option rate of up to 2.75%. And if it is a in-person auction, then the rate, the jurisdiction where the auctioneer has their place of business. Got a good example here. So the auction house is based in Franklin, Tennessee, but they are holding an estate auction in Clarksville, Tennessee. So we got two different jurisdictions at play. The Clarksville local rate is 2.5%. However, since this is an undisclosed principal, or otherwise the seller is not revealed, then Franklin, the auction house place of business, this is the rate that they would use for sales tax, which Franklin has a 2.75%. And so if it's undisclosed and it's from a different jurisdiction, but you, the auctioneer, you have your place of business, then you're going to be reporting sales tax based on where your jurisdiction is, your place of business. Now, if it's an online auction, the jurisdiction where the purchaser receives the product or the delivery address. So, for example, an auction house or the undisclosed principal sells a Swiss watch online. The buyer lives in Pikeville, Tennessee. There's a local tax rate in Pikeville of 2.25%, but the buyer enters her Pikeville address for shipping. So in this case, it's not, not going to be what the Franklin tax rate is. It's going to be what the Pikeville jurisdiction has for the tax rate. So it would be the 9.25%. And as you know, especially as you kind of get into other situations, this may pose a question, but I think these examples here really lay this out in a easy to follow path. If the auctioneer, at your place of business, if they're picking it up and you're just selling the goods and transferring the ownership right there at the place of business, then you're going to be doing your tax rate. And then if it is being shipped to them, of course, it is the destination where they receive and obtain possession of that property. Now, business tax and business license requirements. So, separate from sales tax required for all auctioneers, we have the business tax. So, any person receiving commissions, fees, service charges for auction consignment services, they would need a business tax license. A licensed auctioneer earning income for their services. And I want to just, kind of say exactly what Thomas and Billy referenced a moment ago. This is also going to be in compliance with our, um, you know, thresholds. And so you want to make sure you're meeting the threshold. And then based on the threshold, you get the appropriate license that you're needing. A licensed auctioneer earning income for their services, consignment stores receiving a share of sales of the proceeds. Then we have Rule 1320 04 05 41 is the person receiving income for services rendered concerning the sale or rental of real or personal property belonging to others. And then you have the out-of-state auctioneers with nexus in Tennessee. And so these are some situations where you would become liable for business tax. The out-of-state auctioneer with nexus in Tennessee. This is where you have enough of an economic presence in the state of Tennessee where business tax becomes something you are responsible for. Even in the rule above, if you are selling services or the rentals of things. And so don't just think that it just simply comes down to if I'm not in the state, I'm not liable, or if it's not a tangible good, I'm not liable. There could be other things that would make you responsible for business tax. And then what counts as gross receipts? It depends on your role. If you disclose the owner and you act as the agent, then business tax is owed only on your commission and fees and not the full sales price. Now, this would be if you are selling it, you are making sure that people know who the real owner of the property is. You're not having to file tax on any of the products sold. You're just getting a commission, and fees is all that you're getting out of this. Maybe you did a 20% contract of you'll get a commission 20% of all things sold. Then that is what you would report on your business tax return. But if you own the items, you're selling them, then business tax is owed on the entire sale, full proceeds, including commissions. So it impacts your sales tax, it impacts your business tax. Billy, Thomas, is there anything you want to add in on that, or Dan as well?
Just that business tax, and I think we'll talk about F&E here in a minute. But business tax, sales tax, and F&E are all separate taxes.
Mm.
They are not like kind. They are not compared to each other. We might use them to compare numbers, but the filings and laws that apply are separated to each. So just because one might be taxable for sales tax might not necessarily mean it's required for business tax or franchise and excise tax. So you got to understand the differences in how your business is set up and what you're doing.
Very good
Yeah,
information.
I'd like to echo
Another,
that too and
yeah,
tell how important it is to make sure that we, keep things in their right basket, so to speak, just like Thomas was saying. So, yeah, this is very helpful information about business licensing and that. So, our auctioneers are similar to other businesses that are selling tangible personal property or, in this case, engaged in a taxable service, perhaps.
Dan put it in the chat, but another thing is typically an auctioneer will be either a class 2 or a class 3. That's how we determine in business tax um, how you pay your rates. But there's also another caveat to that called retailer versus wholesaler. Um, so it depends on what your domicile business is and what items you're physically selling. That'll classify you for your classification. And then who you're selling it to will also depend if you're going to owe the retailer amount or the wholesaler amount. An example for wholesaler would be if you do a bunch of cars, you're auctioning off a bunch of used cars and you're auctioning them off to other car lots for them to resell. They'll give you a resale certificate, so you classify as the wholesaler, which that'll change your rate. So you got to understand, you know, what you're selling and who you're selling it to. So those are probably the two biggest keys to take away on top of commissions and fees from business tax.
Excellent. And moving on to the next slide, we're almost done. Then we're just going to open this up to chat for any questions y'all have. Is we have the license type and classification. And so just like Dan put there, usually going to be a class 2 or class 3. As I was mentioning a moment ago, when it's minimal, if you're between the $3,000 and $100,000 thresholds, at this point, Tennessee tax law since 2023, this is going to be a minimal activity business license that you would qualify for. And, if you're over the $100,000 threshold, this is when you would need a standard business license and would have to file the business tax return. Class 2, this applies when you are the general auction activity or general auction activities such as motor vehicles, home furnishings, excluding antiques, tangible personal property not otherwise classified. So if you're selling these things within your auction, that's going to be more of a class 2. The retailer rate on this is 0.15% business tax rate. The wholesale tax rate is 0.0375%. A class 3, this is where you get into art, antique specialty or specialist, antique furnishings, art objects, artwork, jewelry. It's more of a refined selection of things being sold. And so the retail rate on that one is a 0.1875% tax rate. And wholesaler rate, it stays the same at the 0.0375%. And Billy, got
Hey,
anything on
Jeremy.
that? Yeah.
Yeah, I do. Yeah. So we get this question quite often, not just with auctioneers, but with other businesses too. So when you have this kind of, well, it could be class two, it could be class three, and all that. We get to the terminology used in business tax law called dominant business activity. So
Yeah.
this is the major and principal source of your revenue. So we can't say every auctioneer is a class two. As you can see in Jeremy's example, what if you were a real specialty auctioneer and you engaged in the sale of these antiques and these art things like these art auctions do that you see happening, it's some very expensive situations in different places, but unless you're engaged in that, you're probably class two. um, I kind of laugh at wholesalers. I think mostly, you guys aren't wholesaling, but you're probably retailing. So it's going to be that rate. But notice those rates are very small. It's not a ton of tax, but of course, if you're a high volume business doing many volume or a large volume of sales, rather, then it can cause you to owe a little bit of money for sure. And that is the way it goes. But yeah, it was a good explanation, Jeremy, of how business tax works and business licensing.
Good information as well. Thomas, you got anything on that, sir?
Yeah, this tax cannot also be, you can't pass it off. So you have to pay it out of your pocket. It's a privilege tax for doing business in Tennessee. Yes, there is a written in the law that automobile dealers can write it off or can pass it off, but that is a pass-through tax only to them. So even if you auction off cars, um, you don't classify as a automobile dealer, so you are still required to pay business tax. Obviously, as Billy said, it's not a whole lot of money. If you're a class two and you make over $1 million, you're probably going to pay about $2,000 in tax. Um, so it's not a ton of money, but obviously it can affect your bottom line if you're not really paying attention to it.
Yeah, very good information there. Then we go on to online auctions and marketplace facilitators. This is where we have the general rules. So online auctions generally follow the same Tennessee sales tax rules as in-person auctions. Delivery and shipping, this is where Tennessee sales are generally based on the buyer's delivery address. So items shipped out of state, they actually may qualify as interstate commerce sales. That is where possession takes place in another state. And so you are able to actually, on your sales and use tax return, go in and just put down that you do have yes exemptions, and these items, whatever the total of the gross sales were, you can place that within it. And then an important distinction, I'm sure Billy and Thomas will want to weigh in on this too, this is the licensed auctioneers are not marketplace facilitators. So auctioneers are listed in the TCA under Title 62, Chapter 19. This is where we get that specific information. They are not marketplace facilitators for sales and use tax purposes. Typically, you can think of some of the big businesses that people like to, create an account on, and then they will sell their products through these websites. And the website will then pay the sales and use tax because they are qualified as a marketplace facilitator. So this right here, though, this is different. This is where the auctioneer, you are someone more of a licensed professional in this industry, and so you're not going to qualify as that marketplace facilitator, even if you're selling it in those types of ways. And Billy, Thomas, I'm sure this is an area where, subject matter expert, this could help answer maybe some tough questions where people were hoping that this right here would work out for them, or there was confusion on it, if you want to weigh in on that.
No, I think you covered it good.
No, nothing there.
Yeah, same here. I don't know that there's much else to say on that, Jeremy. So yeah, if they're engaged in that sort of activity, then that's what we're after there.
Excellent. So out of state auctioneers and Nexus. So with Nexus, which is meaning you have a responsibility to the state of Tennessee. This is what triggers it through registration, and is if you have a physical presence in Tennessee. This could be an office, a warehouse, an employee in Tennessee. If you are a regular in-state auction, so if you are conducting auctions in Tennessee on a systematic or continuous basis, if it's something where you're coming in once a month, or however frequent it is, but it is a common business model that you're doing. $100,000 in Tennessee sales. So the economic nexus threshold for sales tax is the prior 12-month period. And then you have the Tennessee agents and representatives, those who are using Tennessee-based agents who regularly solicit business. And if you have inventory in Tennessee, or otherwise you're holding items for sale stored within Tennessee. So this is some things right here that can create a nexus for you where you do have a responsibility for that. And I like what Dan said, doing in the chat. Dan, he put that doing business is defined as any activity purposefully engaged within Tennessee by a person with the object of gain, benefit, or advantage. And so, generally speaking, any auctioneer or consignee, that is a taxable entity. And I'll have to see if I can get that fixed. It looks like this here is loading from a resource that's not wanting to display all the things that we have there, but we do have some resources available to you on our website. Those resources are going to be the auctioneer and consignees tax manuals, or consigns tax manual, the sales and use tax manual. You will see these in the downloaded material. You'll see it just fine. The business tax manual, as well as the state sales and use tax rules, and then the TCA, Tennessee Code Annotated, Chapter 67, 6102. That's going to be a dominant thing that you want to be mindful of as a auctioneer. And then I'm going to turn this over to questions. We have got the chat open. If anybody has questions that they would like to send into the chat, and we can take a look at what those questions are, help to answer anything that you have as far as, unique situations you're wanting some tax guidance on.
Jeremy, I think you did a really great job of explaining this topic. You must have just got everybody's question answered. It's kind of crazy.
We want to make sure, hopefully, there's no issues or impacts with the chat this morning.
Yeah, I was double checking that while you were doing that too. It looks like everything's good. If for whatever reason you're trying this, Jeremy's going to show you
Oh, here we go.
a way to get in contact with us for any follow-ups that you've got. So if our chat feature is not working properly right now, don't worry. You can get a hold of us by phone or by email. No problem. And we'll help you out immediately. No problem at all. Thank you.
Yeah, and it looks like we got a question from Jeff Miller. He said regarding slide 6, can a auctioneer collect sales tax on behalf of the seller? So let me go back to slide 6 here.
And Thomas, you may want to weigh in on that one because there's some audit implications in there too. I'm thinking. What do you think, Thomas?
So the biggest thing there, Jeff, is you got to be careful with that, because is the person going to even be liable for collecting sales tax? Like we talked about earlier, there's occasional and isolated transactions or sales that aren't required to collect sales tax. Another question was an estate auction doesn't pay sales tax, correct? Obviously, those would be occasional and isolated transactions. And, if they're in the business of doing it all the time, then they could potentially owe sales tax. So you got to be careful with just collecting it on behalf just to do it. You can, but but if for some reason you decide to file a refund claim, that'll be even more difficult, because then you would have to go back and refund all that sales tax before you can file for a refund. Um, so the biggest thing to do is, if you want to do that and help your client or whatever figure out who they are, what their purpose is, before you get involved in that.
And I would document that big time if that happened because
Yeah, I mean, obviously in your contract, put that you collected it on their behalf and they're not going to be liable for it.
right, because Thomas and crew are going to be looking for that background information to be sure the tax was remitted. Ultimately, that's what matters, as far as that goes. But under Tennessee law, like Jeremy mentioned, that 676102, that's the definition section of sales tax, and it talks about dealers, and it says a dealer is responsible for the collection of sales tax. So typically, that business owner, and then in some cases, the auctioneer becomes effectively a dealer in that scenario.
Another question was delivery and pickup. So if you require the pickup of the item in the state, so you're selling farm equipment, a tractor or whatever, you sell it and you make the person come into the state to pick it up. They are then taking possession inside the state of Tennessee, and are required to pay sales tax. The only exemptions to that are uh, items that are for title and registration purposes, so aircraft, boats, motor vehicles, and commercial trailers. And what I mean by commercial trailers are semi trailers or pull trailers, because those are required to be registered in the state of Tennessee. Those can be used on a 3-day affidavit, whereas my example was a tractor. Tractors are not required to be registered. Um, so you would have to pay, they would have to pay the sales tax on it when they pick it up. Now, if you per se sell it in state in an auction, and you meet them in one of the surrounding states that touches us, then they probably wouldn't be liable for the sales tax. And I say probably because there's other implications that go into that. And unfortunately, not everything is cut and dry with taxes in Tennessee. You have to play 20 questions.
Boy, do you ever.
For a local sales tax.
And it looks like
Okay,
we
so
go ahead, Jeff.
there's a question from Ben on local sales tax. They're out of Kentucky, but do auctions in Tennessee. So and you do not ship, and it's required local pickup, so it'd be based on the location and jurisdiction of the pickup.
Yep. Lance, he's asking, my office is in Tennessee. Our equipment auction sale is on a lot in Mississippi. Should we be charging Mississippi sales tax?
You will need to contact the Department of Revenue for the state of Mississippi.
And Jeff, he's asking, thanks for your answers. Where are the material slides available for download? Yeah, great question, Jeff. So the Tennessee Department of Revenue website, let me go on ahead to this slide here. Let's see. So the Department of Revenue website right here, tn.gov/revenue. When you go to that website, you are going to be on the official website page for the Department of Revenue. And if you scroll down just a little bit, you're going to see an option for webinar. And you want to click on that. And you're going to begin to see that we have a massive list of webinars that we've covered. And for each list, there's going to be a YouTube link where you can watch the video again, and then a corresponding PDF attachment that you can download. This one will be available hopefully in the next day or two. We're going to try to have it out there. We try to go pretty fast to get these out to the public as soon as we get them completed. Dan, he's
And the
put in the
PDF is
link.
there now, though. That's important.
Yeah,
So
the
we put that
PDF
in the
is
chat
actually already
earlier,
out there for sure. And so
which,
there's
by
the
the way, has
slides.
view on there too. Some of the little graphic things drop out on that, and Jeremy tried to capture those, and sometimes you don't know until it goes live, so that's
Yeah.
okay.
Yeah,
We
I got
appreciate
it
your
got it
indulgence on that.
fixed. Last second I got it fixed on that. But we thank you for
Yeah.
your patience. And so it looks like we've got all of the questions answered in this. So you can follow us. We want to make sure that if you want to follow us, we do have our social media information out here for you. The Facebook, X or Twitter, Instagram, LinkedIn. You can sign up for email updates, YouTube. Find our website. You can email us at revenue.support@tn.gov for questions. And then if you have some questions that you need to speak with us about, you can always call us for help at the general tax line 615-253-0600. Our staff is here available to assist you Monday through Friday, 8 a.m. to 4:30 p.m. And here's what we got coming up next. So upcoming webinars on June 30th, we have got the obtaining and using the Tennessee sales tax resale certificates. So this will be a great one for a lot of businesses who are selling selling things that others are purchasing for the intent of reselling them or using them for a finished product. And then in July 30th, we have the 2026 legislative updates. And so that is going to be a very interesting webinar. I do encourage you to sign up for that. We have our new business workshop on July 8th, 2026 for all of those who are new to doing business in Tennessee. This will be a great foundation for you to get started. And then we want to remind everyone, please take a moment to complete a brief survey upon exiting. And remember, to receive your CPE credit for attending, you must answer yes to question 4 on the post-event survey and provide your name as it should be listed on the certificate. Yeah, we'll make sure and get those CPE credits out there for you. But we do thank you so much for joining today. So once again, on the behalf of the Tennessee Department of Revenue, we thank Dan Vinson, Billy Trout, Thomas Meisensall. We thank you so much for being part of this today and helping out. And we hope all of you have a great rest of your week. Goodbye.
Thanks, everybody.